Yeah, so good afternoon once again. I just want to remind us of some basic concepts. Of course, in trading, there are many things that you know, but when it comes to application, you ignore. And most often, that not, we are punished as a result. If you have 4 or 5 rules outlined, you discover that if you follow 4 and ignore 1, this one that you ignore could be the reason why you may be punished as far as that trade is concerned. So that is why I think we must be thorough in our applications of rules that we have set for ourselves. Of course, these rules are not one. There are many rules based on a trader's trading style. But excuse me, let me reduce volume of this TV. So everybody has his own rules, but there's still some rules as far as trading is concerned that are generally applicable to others. And there are some rules that if you don't apply, that could be the missing link, okay, in your trading success, in your attempts to be profitable consistently. That could just be the only missing link. So I believe that as time goes on and we begin to work on our system, begin to work, fine-tune our strategy, borrow ideas here and there, and to make our own system better and better. You see, as time goes on, you now begin to see result day by day. So based on that, I want to believe that one of the major problems that we as retail traders have is that we are not able to define trend appropriately. Okay, we are not able to define trend appropriately. Where is the trend going? Okay, where is the trend ending? Where is it changing? And of course, if you are not able to define trend, that is, if you cannot tell us, in a clear term where you are driving to, it then means that you don't know where you are going. Okay, you can't tell us that this is your destination, this is where we are going. Okay, that tells me that if you cannot tell us where you are going, you could be lost. And in trading, if you cannot tell the direction that the market is going, you could be lost. You could be lost. And if you are lost in trading, you know the meaning. You are losing because you don't know the direction you should follow. Maybe you should go for a buy, then you are going for a sell. If you don't know or you cannot define your trend. And again, what helps us to define trend is structure. Okay, it's market structure that helps us to define trend. But I discovered that, in the course of, a mentorship, the course of delivering lecture in my mentorship class, I discovered that some of my students could not able to recognize structure very well. They do it in a conventional way. And that conventional way of defining structure is really a problem because you will be looking for, a reversal where reversal does not exist. Okay, so I just look at it and said, okay, I'm going to, bring this knowledge, to my people. And that is why we're going to go through this structure I've just drawn. I'll just use it to illustrate to you how to define your trend, where trend is ending and where it's not ending, even though you have a break of structure to the upside. Okay, and when we are done with that, I'm going to go through these 5 basic, rules, that you will use to complement defining your structure appropriately. Okay, once you marry these two together, you should have some major improvement in your trading. So now looking at this structure right here, this is a move down. Let me use another color this time around. Let me use this blue. Okay, you see this move down? So if you look at this structure now, you can say this is a lower low, right? Lower low, all right? But now, when this market get to this level, just pay attention. Once you get it once, that is all. If this market gets to this level, it reacts. You are not expected to trade, okay? You are not expected to trade because the pullback will be deemed to have been over only when, hold on, this is a break of structure. I hope you know that. To the downside, this lower low is only confirmed if the first resistance or the first pullback, which is called inducement or liquidity, if it is taken, that is when this lower low is confirmed. And where is it taken? Here, you are still going through pullback. You are not expected to trade. But look at the resistance here. It's already broken to the upside. That is when this low here is confirmed as lower low. And then this high becomes the lower high. Can you see? Why do we label this lower high? Because it has broken this inducement that caused break of market structure to the downside. So when you go to this level, you cannot say this is a lower high. Your trend is still continuing. You should expect it to, even if you continue to the downside, I will tell you the scenario later. Just be following. You have moved to the downside, you break market structure here. You can only call this level lower low only if this move to the upside break the inducement that caused that break of market structure. Where is it? This level. If you break it to the upside, this becomes a lower high. All right. And then you are moving to the downside. Now, this is supposed to be your lower low, right? But let's assume we have not labeled this as lower low, or you have labeled it as lower low. But this lower low is not confirmed until when the resistance before it, the inducement before it. Where is the inducement before it? This one. If this one, this level here is not broken to the upside, this lower low is not confirmed. Look at it. It's coming. You have a break of market structure here for now. Look at this move to the upside. Does it break it? No. And it's coming down. Boom. Can you see? So it means that your lower low here is wrong. Okay, it means this place cannot be your lower low because it moved to the upside, did not break this top. So lower low is not confirmed here. This becomes your lower low. And the reason why this lower low here is confirmed, you ask yourself, where is the break of market structure now? It is not here. This is not break of market structure here. That level is not break of market structure. See the break of market structure here. Okay, and when you have a break of market structure and you say this is lower low, you ask yourself, where is the liquidity, point that break the market structure? Look at it here. Look at it here. This is the point that broke that market structure to the downside. This lower low here is confirmed only when this pullback breaks this level to the upside. And can you see here, right here, this one, this pullback, you see it? Sometimes before this, inducement level, you are going to see some consolidation here that gives you liquidity at the top. That liquidity will be taken, sweep it to the upside and break this level in order to become what? A lower high. This become what? A lower high. Can you see now? Now, watch something. Do you see this one now moving to the downside? Moving to the downside? It has broken market structure here, right? It has broken market structure. We are supposed to label here as lower low, but it's not confirmed yet. You ask yourself, is there any, any pullback here before the break of market structure? No. But if there is no pullback, you ask yourself, is there any imbalance? Because imbalance is also a level where market can react from and flush to the downside. Is there any imbalance? If there is no, you cannot label this as lower low. No, you can't label it as lower low because this level is not taking. These are some of the secrets that makes many of us, to lose a lot of money. It's not as if we don't know what we are doing, but there are little things, little stuffs that we need to understand that will help us in our analysis that we don't understand. Okay, now the market did not take this top because essentially this breaking this top is area that must be taken for banks to get involved. Okay, to get involved. If it's not taken, they won't get involved. It means that this trend that is still going down is still what is going down. The trend is not over. So this top here did not break this level and it moves to the downside. And here becomes what? If you say this one is lower low, is it correct? Somebody to answer me, is it correct if you say this place is lower low? Somebody should unmute and tell me, is it correct? Somebody should unmute and tell me, is it correct to say lower low? Don't be afraid. If you are wrong, we'll correct you.
Yes, because it broke the previous. Yes.
No. Okay, thank you. Thank you. Mute yourself now. No, you can't say this is lower low. This is not lower low. This trend now is the same thing. Boom. It's the same thing. Why is it the same thing? Because it's the same thing because this top here is the last high. If market structure is broken here, where is the resistance that broke the market structure? This is the liquidity area. Is it taken to the upside? No, it's not taken to the upside. So for that reason, the whole move to the downside is still one. And then you only confirm this as lower low if only this one break this resistance here, which it has done. So for this reason, you can say this is lower low. If when you were answering, you had told me that this move right here has broken this top, for that reason, you can say this is lower low. I will agree with you.
Okay.
Do you understand now? But you were referring to this particular resistance as having not broken this top. Do you get now? So now you have this confirmed lower low here. Why? Because this pullback here has broken this liquidity point. So this one becomes a lower high. Do you understand? So now this move to the downside, this one has broken the structure. Okay? And then this point here has also broken that up. So this one we call lower low. And you can see from this level, what happened to your last lower high? What happened to your last lower high? It has been taken, it has been broken to the upside. And if it's broken to the upside, higher up, it means that this has become a structure. And in that case, you are not looking for sell again. You are looking for buy. So the difference now between what you used to know and understand and what I'm telling you now is that anytime you see a break of structure, that wave, that particular wave that break that structure, for you to confirm that that move to the downside is over, you need to see a retracement that break the top of the last resistance. If that retracement, like this one, if this retracement does not break this top, this low is not confirmed, it means that you are still coming to the downside. You are still coming down. Do you get now? It means you are still coming down. So let me go over it again. I'm going to go over it again so that you get what I'm saying very well. I'm going to delete some stuff and go over it again. Now, let's draw a fresh one. Let's draw a fresh one so that you can understand. You see a move to the downside, correction, a breakdown, right? A breakdown this way. So now, ordinarily, you say this is a break of structure. All right. This is a break of structure. Okay. And now, what I'm telling you right now is that if you are to label it based on what you know, you say this is lower low, this is lower high, and you say this is another lower low. Is that not? But I am telling you that if you are analyzing structure and trend, if you do it this way, you will be caught many times. Many times you think the trend, the push to the downside is over, whereas it's not over. Okay, so what we are saying is that this lower low here is only confirmed on one condition. What is the condition? If you have a pullback that break this top, boom. Hold on. I want to draw it well because I've been using this principle for a very long time to analyze my trend, and until I gave assignments to some of my students and they were failing it before I discovered that I need to teach this. Okay, I need to teach this. Let me clean up some of these things and delete. Look at it again. You have impulse. Okay, correction. In the process of coming, most time you see a move here before you see this break of structure. Okay, right now this become a break of structure. So what I'm saying is that where is the last resistance? Right here that broke this structure. Look at it here. Look at the last resistance here that broke this structure. Can you see? So for you to confirm that this is lower low here, for you to confirm this lower low, you need to see this top taking. You need to see this. Boom. Boom. All these are traps to tell you that you are going down, 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 down. It's a lie. You have to take this top. Boom. Before you come down. Can you see? So it is only based on this condition that this will be your lower low. Why? Because the pullback here has broken this structure to the down upside. And this is where the selling point is. This is where the liquidity is. Liquidity is here, is taken. All the stop losses are cleared. The manipulation is happening right here. That is where market is rigged against we retail traders. Because when we get here, you are tempted to say, this is a lower low, this is a lower high. You say this is lower low. And when market come here, it's lower than this one now. You will be tempted to say this is lower high. That's what I'm telling you. But I am telling you right here that this is not the lower high. Don't look at it as if you are climbing mountain or you are counting your step. We read market condition as if we are going down the stair. That's how we are reading it. And that is why the market is rigged against us. Stop reading it like that. Because this low is lower than this one does not mean this is lower high. This is the liquidity point. Okay, this is what you call inducement. This is the inducement that broke market structure. Allow this inducement, this retracement to break this inducement to the upside before you start looking for sell opportunity. I'm going to go through example for you. So in this case, this becomes lower low. Your lower high is not here, guys. Your lower high is here. Do you get? Now, you have another break of structure here. Okay, you get to now analyze the trend where most times before this break of structure, you will have some reactions. Okay, you have a move up, you have a move down. Now you have effective break of market structure right here. So what I'm telling you right now is that for you to say this is lower low, what you must do is simple. Okay. For you to say this is lower low, what must happen is simple. Who can tell me what you must see? For you to say this is lower low, somebody should unmute and tell me what you must see. For you to say lower low, lower high rather, for you to get your lower high.
Has to be a break.
You said what?
The market must go back to break that liquidity gap
Of the previous lower high.
The previous, that is not this one or this one. Is it this one?
There has
or
to be a break of
the
market
liquidity.
structure.
This one.
Hold on, everybody, hold on. I must be sure you have gotten it so that I won't go through again. This is number one area. This is number two area. Where must market break before I confirm this as lower low? Is it number one or number two?
Number two.
Thank you. Because number two is the previous structure, is the previous resistance before the break of market structure. And that point is called inducement. What do I call it? It's called inducement. So you must have structure like this. Boom. And so most of the time, when you now break this to the upside, you have your lower high here. Okay? And then this becomes your inducement. When inducement is taken, you are at liberty to sell. And then most of the people, you know, they say at the extreme point here, there is other block. After the other block, there is imbalance. True and correct. But the most important thing you must take note of is when this inducement is taken. If you have your entry confirmation, begins to look for that entry confirmation at the break of what? Of this inducement to the upside. Begin to look for entry confirmation. But you find out that in most of the time, or sometimes, this entry confirmation does not come until you come and touch the other block at the top here. That is when it will come, because you know that this is the lower high. This market will not break this top to the upside, except there is trend reversal. So you begin to hunt for your, maybe change of structure, or change of environment from bullish to bearish. Begin to look for it in smaller time frame, like 15 minutes, like 5 minutes, like 30 minutes, like 1 hour, depending on the type of trader you are. And you will get it on or before this level. So this becomes the lower high. And then market comes again. Look at it. Markets come again, trending down again, break the previous low. Let's say like this, break the previous low. At what point do we have break of market structure now? Now, see the mistake that many of us are making, and is just too bad. Okay, in the course of teaching, I got to know this. Many people will now say this is break of structure, right? Many people will say this is break of structure because you have impulse, correction, break of structure. Is that not? No, it is not break of structure. It's not the real break of structure. The real break of structure is coming when this lower low, our confirmed lower low is taken. This is our confirmed lower low. Why? Because this pullback has broken the inducement that caused it. When a pullback breaks to the upside or to the downside, the inducement that caused a break of market structure, then the lower low or lower high is confirmed. So in this case, we are on a downtrend. So this lower low is confirmed only when this pullback break this inducement to the upside. That lower low is confirmed. Right now, because this is the lower low, it is only when market breaks it to the downside that we confirm a break of market structure. Now there's a break of market structure. We now want to check where is the last resistance, because before this break of market structure, see it here. And this level is what is called inducement. If this level is not taken, if it's not broken to the upside, you have no valid sell. If you have a sell confirmation around this level, do not take it, because you are at a discount level. And it has become an abomination to sell at discount, because you have failed before you started. Before you started that business, you have failed already. It means that you are doing a business with 1 million US dollar, and before you even put money into that business, you have already lost 500,000 US dollar. That is what it means. Get me right. It has become what? Criminal. As far as trading community is concerned, for you to look for sell opportunity below inducement level here, below this level. Because effectively, from here to this level, here is a premium. From this medium equilibrium point to the top is the premium level. From equilibrium point to the low is the discount level. So if you have a retracement here, selling here is criminal, because you are stealing your own money. I don't know if you understand. You are stealing your own money. And criminal are criminal. Whether you steal my money or you steal your own money is criminal. So don't do it. Wait. Let me show you something. Now, let's continue. If you have this move now come this way and the market comes down this way, where is our lower low right now? Is it 1 or 2? Is it level 1 or level 2? Where's our lower low?
Level 2, sir.
Correct, because this particular move to the upside did not break the inducement that caused break of market structure. So you are getting it. I'm happy you are getting it. So even though you have break of market structure here, because the previous low is broken, you do not have your lower low right here. You do not have it. Your lower low is not here, because this move to the upside, the retracement did not break the what? The inducement level. So right here, you have your lower low here. In this case now, where is the last, inducement point? Here. It's no longer here again, because this level is lower than this level. Market may now come this time around to do this for us. It may come to do this for us, break this level, come down, break this level, and come to tap this high for us to have a move to the downside. Can you see? So can you see that right here, you are having a sort of trend line right here. Market will come. Remember, I call this level inducement. Remember this level, I call it inducement. I call this level inducement. I call this level inducement. Is that correct? Now, and you were taking those inducement 1, 1, 1. You take the first one, you go down. You take the first one, you go down. Here, you take first one, you go down. This one, you take this first one, you go down. Here, you have 1, you have 2, you have 3 at the same time. Market will now come and sweep all of them, both this one, and this one. Market will sweep them to the upside and probably tap from here. As long as this lower high here is not taken, you are still in a downtrend. This is where market rig me and you out of the system. Because if you are knowledgeable about what I'm teaching you, when this market is coming to the upside and you have seen this trend line here and all this inducement level lie down perfectly for you, you should know that you are going to clear all of them to the upside before you sell. So if your sell setup presents itself here is below what? Inducement, do not sell. Right here, yes, you have broken this level to the upside. So you are qualified to sell here. But for one reason, you will not sell. And what is the reason? You have this inducement here, inducement, 3 inducement lining up at the same location. So the possibility of you clearing all the 3 is here. And by the time you want to sell here, you have not cleared the last one. So it means you will be rigged out of the system. When you are selling here, market comes this way and pull up again to break this top. And that is the last inducement. It is only when you have taken this last inducement that you can pick order and sell again to the downside. And in this case, this becomes your lower high. This becomes your lower high. This is not your lower high. This is not your lower high. This becomes your lower high right here. And then if on your way to the downside, you now have this move and you break the structure again. So this is a confirmed this lower low. You don't know whether this one is lower low. Why do I say you don't know whether it will be lower low or not? Why do I say so? The reason why I say so is that you don't know whether you are going to have a structure like this and downside. And if you have a structure like this and you move to the downside, this become, even though this is your break of structure, this is never your lower low. Here is never your lower low, because this retracement does not break this structure. This is the move that broke that structure. So this is another break of structure, okay? But right now, here is your lower low, okay? And then this market now come, move upside down and break this one, even with 2 pips is enough, and make a low. Then this becomes what? This becomes this liquidity point, which is called inducement, has been taken. This has been taken to the upside. This becomes your lower high, and then move to the downside. You can't confirm lower low except you have the last resistance. Of course, it's not always a straight line to the downside. Then if you have a move here, you see liquidity point, and have a move to the downside, then you must clear this. Once you see this, you must clear it to the what? To the upside. You must clear it, because they are all inducement. They are all inducement that are repetitive, coming up together. These are all inducement that are coming up together. Okay? They are all inducement that are coming up together. You must take them before you sell. So this is how you analyze your structure. This is how to analyze structure, and this is how to get your trend. And then I'm going to give you these 5 basic rules that you are going to match with the structure, identification of structure that I've just taught you. You are going to match it with it, and you are going to be applying it. If you practice it and you are getting it, cool for you to be applying it. So the first thing you do when you get to the chart is to ask yourself, where is the higher time frame trend? Okay, depending on the type of trader you are, but for me, daily. Okay, daily is cool for me, because most of my trade, I open it and close it that day. It's only on a rare occasion that I hold trade for 2, 3, or 4 days. Okay, so based on that, daily is okay for me. I also look at weekly and monthly, but I work essentially with daily. All right, I want to look at it. Am I in the uptrend or I'm in the downtrend? So let's take for example that we are in uptrend. Okay, for daily, we're in uptrend. Okay, that's number 1. If you have confirmed that, and how do you confirm that you are in the uptrend? Maybe you have a structure like this, impulse, and you have a pullback like this. Okay, so now if this is confirmed that you have to start a move to the upside. If this is daily structure, then in daily you are in what? Uptrend. Okay, now the next thing is lower time frame impulse in trend direction. Okay, so last you were having corrective structure like this. Then if you go to lower time frame, like 1 hour, you must be able to see an impulse to the upside like this in the direction of your trend here. That's number 2, very, very important. Number 3, correction to discount for buy and premium for sell. What do I mean? Correction to discount. Now we are in a buy. We have seen the impulse on lower time frame. We must see correction, okay, to discount. This is discount. Discount is when you have impulse like this. This level is premium, middle is 50%, which is equilibrium, and the low between equilibrium and the lowest point is the discount. Okay, so if you want to buy a pullback, never buy a pullback between premium and 50%. You can only buy between 50% and what? And the lowest level. And you remember that Between 50% and the lowest level lies 61.8. That is where you hear 61.8 is the golden ratio. They say it's the golden ratio because it's not just like it's a golden ratio. It is a heavily discounted level where market can quickly react and give you buy, where big volume lies. Do you understand? So you must allow correction to discount for a buy and correction to premium for a sell. Okay, then one stuff that I have written here that you may not be taking cognizance of is this number 4, liquidity clearance or inducement clearance. This is just the same thing I discussed with you in trend analysis right here, how you must allow this inducement to be taken. So now look at it. Look at this structure. You are having a consolidation here. Okay, you see all this level is the inducement. This inducement I taught you here is the same thing you are saying here. You cannot buy here. No. If you buy here, the market will come down. You have to wait for clearance of this inducement level. How does it clear? Clear to the downside. It's only when it's clear to the downside to discount level that you should be looking for opportunity to buy. You get now? 5, break of structure to confirm true liquidity clearance. What do I mean? This market has come down here, okay? But how do we know that coming down is not that this market is going to the downside to break this low? How do we know? Do we just jump in, or what do we do? Now there's liquidity clearance, okay? If this is a true liquidity clearance, then we should see a reaction here. A very impulsive move here. If an impulsive move here tells us that the move to the downside is a liquidity grab, clearing this equal low here, and then the move to the upside here is a result of the liquidity that was grabbed, and that is the impulse. Then the correction here is your trade to the upside. It's your trade to the upside. Okay, it's your trade to the upside. Do you get now? So this is how you will apply these 5, points that I've itemized for you. One big issue is that if you miss one out of it, you may fall into trouble. Yes. For instance, if you get the higher time frame bias correct, fine. If you get this impulse on 1 hour time frame or lower time frame, if you get it correctly, fine. If there is liquidity here, okay, and break of liquidity to grab order from here, this inducement point, if you break it to the downside, if you get that one correct, but you are not waiting for this impulse to come, you might suffer. You might suffer because it is this impulsive move here that confirms that this is a true liquidity grab. So if you don't wait for this impulse, this market might be flying down forever and you have lost. Can you see? You have omitted just 1 point and you are suffering. Break of market structure, if you omit it, it's important that this area here is taken to the upside. Okay? It's important. If you don't allow this to be taken to the upside, if you just have a small impulse here and correction here and you sell, it can take you down forever. So what confirms that you should be looking for corrective structure is a break of this structure to the upside. When it breaks to the upside, you are confirmed that you are moving to the upside. You now wait for what? Discounted level. You move to the upside. Okay? So if you respect this, respect this, respect this, respect this, respect this 5, I guarantee you, you will have more than 50% win rate. And it gives you a better risk to reward. Now, let's see some of the setup. And again, another advantage you are going to have by looking at market in this perspective is that the possibility of you to fall into wrong trade is minimized. That possibility is minimized. You're not going to fall into wrong trade. And if you are using a smaller time frame to trade, the possibility of you having a big win to risk to reward ratio is also there. Do you get? But the downside of this is that you don't find trade regularly. You don't find trade regularly. When others are trading, buy, sell, buy, sell, buy, sell, buy, sell. You are looking, you are watching, you are expecting the confirmation, to happen. One will happen, second one will happen, third one will happen, fourth one will not come. But let me tell you, that fourth one that is not coming, that is not confirmed, is the one that is saving your money in your account. It's saving your equity for you. It's making your equity to be intact for you. Do you get now? So for instance, let us look at this one, this GBP card where we are right now. You see what I've just done? In higher time frame, I may not bother to just go to that higher time frame. I've analyzed the higher time frame and I feel that this market should still be going to the upside. After this correction, look at how it pushed up powerfully. So now, what do? I try to look at this impulse right here. What do? I look at it and say, okay, if you have impulse like this is 50%. I don't want to buy on this 50% and above. I don't want. I want this 50% and below. That's why you see I mark this level there. Now I'm watching. So higher time frame trend, I've done that. Lower time frame impulse in the direction of the trend, I have seen it. Where is it? Look at it here. Look at it here. That break this structure. I have it already. So correction to premium, discount, correction to discount, I want it to be corrected to this level. Okay. And when it gets to this level, do I see liquidity? Do I see inducement? Yes. See my inducement. See one here. See one here. Look at this level. I don't want to buy here. I don't want to buy here. Number one, it is criminal to buy at a premium. We need to buy at discount. Nothing concerns us with premium. And this level is premium. Any level above 50, I told you, is premium. And we are not interested in buying at premium price because we are really business people. We want to make profit. That is why we want discount for everything that we want to buy. So for discount to come, this market must come down here. If it doesn't come down here and is going upside, you are not, it's none of your business. It's not your trade. You get? It's not your trade. So right now, so you have equal level here. I want this level to be taken. If this level is taken to the downside, it means I have cleared point number 4, liquidity. Inducement is cleared. Number 4, look at it. Liquidity clearance or inducement clearance. I have it right here in number 4. If it clears it downside, I've had my way. Another thing is this. We have seen correction to discount for buy and premium for sell. We have seen that. Then we have break of structure to confirm. That's what I wanted to write. To confirm true liquidity clearance. Okay. If this move to the downside is a true liquidity clearance, then the last inducement here, I must take it to the upside strongly. And that's the break of market structure. Then the correction is what gives us a trade. If you don't break any noticeable structure here to the upside with a strong move, then you have no trade. Okay? So let me go to, I believe we are clear now. That's just an example of how to analyze this trend, how to look at inducement, or how to look at liquidity, and then how to use this framework I've designed here for you to, to take advantage, of those things and, get our trade set up. Let me give you example of Euro card that I took, very brilliant trade. Small trade, but very precise, very, very precise. I'm going to give you right here. Okay. I've taken 2 trades here on Euro card. I'm going to show you now. Higher time frame. In fact, this one, when it was here, I gave you a YouTube video that shows that we are going to the upside. It was here where that time and look at it, we are upside up to today. Okay, so let me analyze how I took this trade to the upside. Now look at this level, guys. What do you notice? Equal top. Why do we have this? The reason why we had this equal top here is that there was no big injection to push this market for reversal. So that tells me that anywhere we get to here, once I see liquidity clearance, I'm going to look for a buy to the upside. And what happened here, guys? Look at the level here. So when I spotted these two levels, I say, okay, no problem. Two things I'm looking for. Watch out for this. If you take a fib of this level to the upside, can you see that this level is this is 50% and below? That is your what? That is your discount. Okay, that's your discount. Then right here is your liquidity. I told you must see impulse in the direction of the trend, and this is our impulse. This is our impulse in the direction of the trend. That's number one. Number two, I say you must see correction to discount. Yes, we are in discount. That's number two. Number three, I said there must be liquidity clearance. Okay, look at it. Equal low. Here is a liquidity or inducement. This inducement, this is inducement, this is inducement. It is clear to the downside. Number four, I said there must be break of market structure. Look at the resistance broken to the upside. After break of market structure, it confirmed that this is liquidity graph. What next? Correction to the average point, and then you buy. I took this buy, boom, to the upside. Can you see all the 5 points were respected here? Even though I close it a little higher. Okay, now let me show you another one. When we came this week, this was the first trade I took. Of course, this is a sign that we are moving to the upside, and this is the impulse in the direction of the trend, and then this is discount from where? From 50 to what? To the beginning. That's the discount. Okay, we had this discount, and then the next thing is I want to see liquidity. You see it clearly in 15 minutes. I want to see liquidity to that discounted price. And where is it? Simple. Do you see this? Okay, if you are to trade this, will it not be here that you are going to put your buy? Because it has hit trend line, put stop loss below. What happened to your stop loss? They are all gone. So I must see liquidity. Where is it here? You see correction? When we see this correction here and it flows down, we know that the order is taken. So what else do we want to see? We want to see a move up that break market structure. I got it. The next one, 50%, take your trade. That was the trade of yesterday. Beautiful one. Beautiful one, guys. To the upside. I think I closed above. This retracement came, then later it now move up. I close around here. Beautiful 1 to 3 risk to reward. Can you see now? So it's as simple as that. Now this market is coming down. Assuming it's going to come to this level, what will be an indication to show us that it's coming? We are going to apply the concept I taught you in analyzing structure and trend. So if this market breaks this level now, we'll have to find out whether taking this inducement and this inducement is another liquidity graph below it to move to the upside. We're going to find out. If it is liquidity graph, as soon as it came down, it's supposed to flash up again. But if it does not flash up and it rather correct here, okay, and break the last resistance, look at it here. Remember the rules. If you have it here, the last resistance here, once it's taken to the upside, you are qualified to what? To sell to the downside. It's as simple as that. But if you do not have it this way, if you are having, let's say, you are not having this pullback right here, You are just having a powerful move to the downside here. You must have what is called an imbalance. So if you have a correction here, if any, there's pull up to the upside to the imbalance level, you look for change of structure there and have a sell to the downside. Do you understand now? So this is how I approach this market. And in addition to structure, you look at your pattern, you look at your flat corrective structure. This is an expanding flat. You look at the liquidity. Does it grab it? Yes. Does it come to discount? Yes. Does it make impulse away? Yes. Does it correct? Yes. Then you take your trade. Okay. So that is how I do it. I want to ask if there's any question before we close for the day. Is there any question? Is there any question? Hello dear, is there any question? Yes. Can you raise your voice a little?
You mean that you should not use other block or break of structure?
I say you should not use other block.
Yes, or break of structure.
I say you should not use other block or break of structure.
For break of structure, yes.
Okay, let me address it one after the other. I think I understand the first one, but I don't understand the second one. Okay, what I told you about other block is this. Listen, if you are coming down this way, you have correction. You have impulse. Okay, this is your break of structure, right? If this one is coming, where do you have other blocks? You have your other block here. One is here. You have other block. Another one is here. Is that correct?
Yes, sir.
Correct. So what I'm telling you in essence is that coming to tap this other block is not compulsory. What is compulsory is taking this inducement, taking it to the upside. Once you break this inducement to the upside, begins to look for your sell opportunity. Don't wait until you come and tap this other block. I am not saying other block is not important, but what is more important is what? Is your inducement. Is your inducement. We are not looking at your other block. But some of the time, let me not say most of the time, some of the time, market come, take your inducement, and they now tap your other block. That one exists. Okay, in that case, instead of you, after break here, instead of you to come down, it will tap the other block. But you now see that most of the time, the distance between your other block, the distance between your other block and your inducement is not far. It's not far. So most of the time, market just come and tap it. After it tap it, it now move to the downside. But I'm telling you that inducement is more important than other block. Why it is compulsory for you to take your inducement before you look for buy or sell. It is not compulsory to tap your other block. Have I made myself clear? Go and do your back testing. What is important and most relevant is inducement. But I found out that in the course of my research, I found out that many people are looking for other block, and less priority is placed on inducement. It is your inducement that determines the level to which you should look for buy or sell opportunity, not your other block. Other block is just a mere confirmation that yes, this is your true inducement. It's just a confirmation. Do you get? And in most of the time, your other block is just there to show that this market should not break this level, that you have broken this inducement to the upside. Then you tap this other block that if you couldn't get your entry set up at the break of your inducement, you should get it at the other block for you to move to the downside. Simple. Have I answered your question?
Yes, sir.
Correct. So I'm not saying other block is not important, but it's not as important as your inducement. Okay, and what do you call inducement? Some people are still confused now. What is inducement? If you have a move, you have a correction, you have a move like this. This is a break of structure. Where is the pullback before the break of structure? This is it. So this is your inducement level. If this market is coming up again, if it does not break this level, if you get to equal level and come down, do not sell. That is the secret I'm showing you today. If you come to the same level and come, that is equal high, do not sell. The market is coming to break it again. That's where you see double top is a liquidity point. It will break it before coming down to the downside. There is no time for me to marry this to Elliott wave theory for you, so that you understand what we are saying. And most of the time, why we apply Elliott wave theory and we don't get results is because of some of these little stuffs that we need to add to it. And that is why I keep saying, do not trade you want to trade demand and supply alone, or you want to trade Elliott wave theory alone. Most of the time you will struggle. But when you borrow this idea, you use it to, improve the main system you are trading. Is that okay now? Any other question?
Yes, sir.
Okay, what's the question?
Okay, sir. Inducement, what you call inducement and liquidity area, I'm sure it's the same thing.
It's the same thing, yes.
Okay, then can you quickly expatiate the other block? What you mean by other block?
Okay, other block is nothing but the last buy candle in a bearish order block. The last buy candle before the sell is the other block. For instance, look at it this way: you have up, you have down, you have up, you have down, you have up, and then you now have this candle. Let me put a candle. You now have you have this candle, and this candle, let's say, is bullish. Where is the color now? The color field is green. And then you have a wick on top, and you have this one this way. Okay. Okay. Now, and this one is red. Feel it, red. Yes. So now, if you are now, let me see. So right now, if you want to sell, maybe the previous level. Okay, let's leave that one. Let me not confuse you. So now you ask other block. This is other block. This is other block. From here to here, right here is the other block. Okay. Now, if there are variations, you can have another one that, let me use this one, another, not to waste time. If you have this particular one, that this is the one that is engulfed, it is the one that is higher. Can you see? So which one is your other block now? So do not be tempted to say this is your other block. No, forget it. It's not your other block. This is not your other block. Your other block is the one that tap liquidity from the high. The one that tap liquidity. You know, the previous one I drew, this one was not there. So it was this one that tap liquidity from the high. So the order included the one that came to this level up here above this engulfing. But in this case, if you have this one having wicks to the upside, you see which one is higher? Is the engulfing one that is higher. Is the one that tap liquidity from the upside. Then your other block becomes the whole of this level. Boom. Wow. This is your other block. So the reason why I have to show you this is that when you are taking your decision, do not take your decision based on this level, that the market cannot go beyond this level. Wrong. What of this one that is higher than that level is part of the other block? Your stop loss has to be above it. Is that okay now?
Yeah.
So that's how to understand other block. And then this other block becomes a true other block with one condition. There are two conditions to confirm that this is a true order block. Two conditions. Number one, there must be what is called an imbalance candle after it. This is an imbalance candle. This one has wicks, and then the next candle that come after it also have wicks, but the wicks of that one is only here. You can see that, and this one, the wicks after it is only here. Can you see between this level and this level, there is a gap to which you have no demand, you have all supply. Can you see?
Yes.
So that level is what is called imbalance. Okay, this is imbalance. No demand exists within this level, only supply existed. And this imbalance happens just below the order block. Do you get now? This is condition number one. Condition number two is that there must be a break of structure. Right now, there is a break of structure. Where is the previous low? Right here. This is previous low right here. Now the structure has been broken to the downside. You can have this like this. Can you see? You have broken your structure to the downside. So if this market is to go back to the upside, it either come to imbalance level here and make a move to the downside, or it comes to the other block here and make a move to the downside. But what will you see to confirm that you are going to make a move to the downside from the imbalance, or from the what, or from the other block? You need to see your entry confirmation. And if your entry confirmation is break of market structure, then when you go to lower time frame, when you downgrade this structure to a lower time frame than the one you are using for this analysis, where you see this imbalance, maybe you see this imbalance in 1 hour, you decide to downgrade to 5 minutes or 15 minutes. Then you are going to see a move away from this other block or from this imbalance. You see a pullback, you see a break of market structure right here. Then you see a pullback right here to this premium. Here you have your sell. So in this case, you are not taking the trade from the exact point. You know, you are not taking it from the exact point. And with this system, you have a big risk to reward advantage in your favor. Is that okay now? So these are the two conditions that define correct order block. You must have an imbalance candle after it, and you must have a break of market structure. If there is, somebody will ask me, why must we have these conditions? If imbalance candle is a range of, is a price range where there are big orders that come to the system. If that order is extremely big enough, if that injection is big enough, then it must be able to create excess supply in this scenario of sell. It must be able to create excess supply over demand, and that should be big enough or powerful enough to break market structure. But if you are having this as order block, and you are not having an imbalance candle here, and the thing came here and is going back and is coming out, this is not order block, my friend. No order come here, fake order, fake, fake, fake. Because if it is not fake, why is it not coming down to break structure? Why is it rigmaroing here? That's what we are saying. You get?
Yes.
So those are the two conditions that define order block. Another question, one more question, then I close. One more question, then I close. No question. All right, so thank you guys for attending. I believe this will be useful for somebody. And please just try, make use of it. Especially, don't joke with this 5. No, this is a Euro card. It's under GBP card. Don't joke with these 5 principles I've given you. They are very, very powerful, guys. Very, very powerful. Where did I write them? Don't joke with them. I'm going to, let me expose them for you again. Don't joke with this. Don't joke with this. They are very powerful. They will help you. They will help you. I'm serious. They will help you. This, you know, is really hard to lose. If you lose, you have missed one out of it. Except for me, if I lose, I want to do longer truth. What do I mean by longer truth? Go to AUDNZD. I will tell you longer truth. you want to, you are anticipating a buy, you want to catch the buy, you want to catch the buy and catch the sell at the same time. Okay, that's one of the biggest problems of a retail trader. We are not patient enough. You know, I have done the trend analysis for this pair. It's coming down, no doubt, based on Elliott wave theory and everything. You remember, I forecasted when we were here that we are going up on Elliott wave theory. The upside is done. Now we are coming to the downside. Let's say if you just go to 4 hours time frame, if you analyze the trend where you see that right here, let me show you what I've just taught you right now. You see this, anytime you see this, it's ready for the downside. You see this, you see this, you see this. Break of structure here. Where is the resistance before the break of structure? Right here, right here. So this is confirmed as lower low because this one has broken this level. So this becomes a lower high. So this one comes again, break market structure right here. Where is the resistance before the break of market structure? Right here. Where is the pullback coming to? When this one came here, do not sell because it's coming to break this level. It broke it to the upside. This becomes a lower high. Then this one comes, break of market structure. Where is the last resistance? Right here. And you now see that market never came to break it. Market never came. And you have this, and market pulls down. So right now, where is the last resistance before they move down to break liquidity? Right here. And then what did I tell you about when you see consecutive level of inducement together is called liquidity. So I anticipated that this market is coming to the upside to break this level before coming to the downside. So the only condition that will make us to sell AUD/NZD is if we break this liquidity point to the upside. We don't need to come here again because this is not the first high. This has become another level. Once this level is taken, we are qualified to look for sell opportunity to the downside. So it was based on that I gave a buy trade here yesterday without confirmation. One of the confirmation was missing. And where's the confirmation? I'm going to show you right now. I saw this liquidity taken. Let me show you. Liquidity taken. Boom, taken. Then market move. Boom, to the upside. Okay, I needed to see my correction to discount before I call for buy. I did not wait for it. I just look at it, how many pips. The pips is small. I just took it. I did not wait for discount. That was what I missed, and that was why the trade hit stop loss. And it was very painful, and ever since then, I've not placed a single trade. When I hit a stop loss, I pause. I look at my system again. Right now, the way we can approach it, if truly we are going to come to take this liquidity right here, okay, and we have taken this to the downside. What we are going to do now is simple. Right now, you have the move, you have the correction, you have the liquidity grab, you need a break of structure, you need a correction to discount, boom, to the upside. This is the system. This is what you are going to do. And you can see it's following the system one after the other, because right here, the market has made a boom to the downside. Can you see? Okay, I already saw this coming. Okay, and it came here and immediately, what did it do? What did I say? It's a proof. This is what I teach in my mentorship class. I'm revealing it to you. This is a proof of a liquidity grab. When it moved to the downside and immediately move up, it's a proof of liquidity grab. And once it happens like that, upside is non-negotiable. So what we need to do right now is to wait to see a break of structure this way. Okay, I want to see this market break this structure. At this point, I cannot buy. At this point, I cannot buy, because if you buy here because you have pullback, what if it continues to go down? What are you going to say? So the only proof that we will see before we buy is liquidity grab, upside, break this market structure, give me correction, then I buy to the upside. The correction must come to distant. Very important. It could come to this other block you are seeing. You see impulse, you see a reaction down, you see a push up. This is other block. Okay. And why does it qualify as other block? You see the impulse after it. Okay. Now, once this structure is broken, we want to see this correction coming to this level. It may not come to this other block. Let me prove it to you. That was what I was telling you the other time, guys. It may not come to that other block. What of a situation where I have this consolidation here, I have a breakdown here. Can you see a breakdown here? This breakdown here has grabbed this liquidity, but it has not gotten to this other block. And from there, it make a move to the upside. Do I have to wait for it to come and touch this other block again? No. Or if you see a correction here and a move up, this has become an inducement. So if you have a corrective structure here, you only need this inducement to be taken. It's not compulsory to come and tap this other block here. Once this inducement is taken, guys, you have right to buy this market to the upside. That was what I was trying to explain to you the other time. Other block is very important, but liquidity, but inducement is more important. Right now, I will be happy if at this level I can have a corrective structure like this, move to the upside, and that move to the upside, let it be the one that break market structure. Okay, if it's the one that break market structure, fine. It means that this move to the upside has an inducement right here. So if this is other block, I'm not waiting to come to this other block. I want to see correction break to this level. Once you take this level, you have right to buy this market to the upside. But in most cases, we put stop loss below the other block. Okay, and then you have a move to the upside. Where is your target? You want to take the liquidity zone right here. You want to take this one, this level, you want to take it. You want to take it. That's just the objective. Okay, you want to take this one. What is the last point here? Boom. That's the objective. Once you take it, it's over. But this is a counter trend trade. We are only looking at this trade like this because we understand what is going on. We understand what is going on. I told you yesterday, I called for a buy yesterday. Did you see it flying down? No, because I know what I'm doing. I know what's going on. Okay, but just a little move because I kept the stop loss very tight and then it hit it. And that's not a problem. You learn from it. So once you break this level and you come to this side, we look for a sell setup again, boom, to the downside. Why are we looking for downside? Weekly. Weekly is giving us idea about what to look for. Weekly. All right. Can you see? Weekly. Powerful candle coming down. Can you see? You can't beat this. Nothing. We stop this from coming down. You see this? You see this? Squeeze. We call it squeeze. When this one is behaving like what do you call it? A spring that you compress together. When you release that spring, what will happen? Okay, you compress a spring together. When you release that spring, what happens? You fly up and fly down. You flash up and flash down. That is what is happening here. This is acting like a spring. When you release it, boom, upside, boom, downside. Simple. Any other question? I think it's enough for today. I really thought here today as if I'm teaching a mentorship class, but that is okay. We are together. You have to benefit from me too. All right, just as I can benefit from you too. All right, so that is all from my side today. Go and practice it and let me see if you back test. Let me see how. Let me hear your experience about what I've taught you today. I'm not really come to analyze the chart. I've just dedicated today to exposing some of the secrets that was lacking. I got to know this from my students that they were not getting the stuff until I have to break it down for them, just as I have done for you this afternoon. So All right. Thank you very much for attending. God bless you. Bye-bye.
Thank you. God
Yeah.
bless you.
Yeah.
Right, sir. Please, we need the video on YouTube.
No problem.